New York. We're joined by Ryan Gibbons, managing partner at GPS Capital Markets. Ryan, very good morning to you. We seem to be stuck in a bit of no man's land at the moment. What will shake us out of it?
Well, really, that's where we're at right now. Is you've got the data coming out this morning is, it's fine, the jobless claims, but really we've moved on from this idea that we were going to quit the taper, and we're now moving on to looking at the government and the impending shutdown. And as the markets open over here today, we're going to that'll be on everybody's mind.
Ryan, what happened to that dollar rally? Are we ever going to see that come back again?
Well, not as long as we've got Congress reading green eggs and ham. Maybe they ought to put on their uniforms and battle it out in Wembley Stadium this week.
The bizarre thing is, though, of course, Congress having a problem is risk negative, which means actually it's supportive of treasuries. It's kind of bizarre, bearing in mind we're talking about government debt, but there we go.
Yeah, I think what really has happened here is that we had this dollar sell-off, and at the beginning of the week here, and it's really, or excuse me, at the end of last week, and we kind of got through that piece of it, and people have settled down, and those losses that the dollar took were pared back and come back to where we are about those same levels before, and now you turn around and look and see what's next on the agenda. Unfortunately, everybody wakes up and sees that when Congress starts arguing and they know that the government will not be able to pay its bills by the middle of October, that affects everybody, and that affects sentiment, and that weighs heavy on the dollar.
But Ryan, how is this all going to shake out regarding the debt ceiling? Guests we've talked to on the show today seem to say that, yes, there's reason to be worried, but it's likely going to be an 11th hour deal once again. What do you think?
That's typical. That's typical of the U.S. and Congress here as of late. But and I too agree that they're going to end up doing that. But what does it mean, down the road as you continue to have this type of indecision and just simply kick the can down the road a little bit further and let somebody else deal with the problem? Yeah.
Okay. So Ryan, just as we go through this, what's your thought? Are we going to sort of grind higher, do you think, for equities towards the end of the year?
Yeah, I think we get this through. The underlying business has been gaining momentum here in the U.S. and people's sentiment. You see people purchasing homes again. You see a lot of homes being built. You see individuals making purchases that maybe they hadn't over the last few years. And I think the economy has had some decent momentum from the consumer side, and we just follow that through. So if the government can do their work and get out of our way, I think we'll be fine.
All right, Ryan, thanks for joining us this morning. Have a good day yourself. Ryan Gibbons, managing partner at GPS Capital Markets.